That would do it, huh?
Yeah, sorry about that. Okay,
Usually I'm the one that screws those things
here
up.
we go. All right, there we are. How's everybody doing? We got about 10 minutes to go before the announcement. And we'll get to the announcement at 2 p.m. Eastern. We'll look at the headlines, try to figure out what the Fed is communicating. The market largely is expecting 25 basis points or a quarter point rate hike. And we'll see what happens there. Anything more than that will be extremely bearish for the market. I think by and large, this market has priced in a quarter basis point. More than likely, what's really going to be the market mover is the presser at 2:30 p.m. So we'll get through the initial reaction on the announcement of the rate hike. There's some opening remarks with that. And then we'll see what the price action does between 2 p.m. and 2:30. And then when Powell comes on, we'll see what the headlines are from his comments. And then hopefully we'll kind of get a direction there as we get into the end of the day. But this is probably one of the most highly anticipated FOMC announcements in a while. Because the market's really looking for them to be very dovish, or at least pause in their approach. But they've been saying that that's not on the table, so we're gonna see. They got a chance to prove the market wrong, I guess.
I'll flip them back and forth. I'll look at the chat as I can. Can you see the chat, Phil?
Yeah, I can a little bit.
Okay.
But I'll need you to look at it when the headlines start rolling through.
Okay, yeah, because I'll be trading too. Sorry, guys. We're gonna be doing like 40, 50 different things. So. Got So I bought those March PayPal puts. So Elon Musk is going after PayPal with payments from Twitter. Should be interesting here. I think So what's the betting pool saying? What's everybody thinking here? Think we're going to go up or down? Hot Cake is going for hot up. If you're right, Hot Cake, the guys are thinking if the Fed's not hawkish enough, we can have a 3% move higher here, take us right into 4180 for ES, and then we're probably priced for perfection at that point.
We have the JP Morgan caller strike is over here at 4065 on SPX. So over here I've got SPX. In the middle I've got the SPY ETF, and then over here we've got the futures, which once the announcement hits, we'll get rid of the countdown timer, and you can see that.
the good news, if you guys are heavy in the commodities, if he's dovish, you're going to see probably energy and commodities, gold and silver. It'll be a light show. And if he's hawkish, I think everything moves up and down together today. That's my view. So we'll see. Yeah, I think we're all guessing. Phil and I didn't get a chance to call Ken Griffin this morning from Citadel and ask him which way the market's going to go.
JJR, it has been, but we're at a 0.2 now with it where we're in this support zone, and that's over here, basically the shaded area. That's big weekly support supply zone in there. So yeah, if it starts breaking through down through here, then obviously I think the market's got an opening up a range higher. But right now it's trying to hold that bottom of that range, and we'll see if we can get a rotation back up. Eventually what's going to happen is this thing will catch a bid, and we'll go back and test the daily range trader high zone there, which will probably initially reject. But so we are due for a larger rotation back up, but it's pretty critical that this area holds, in my opinion.
Yep, I agree.
We got Ethereum in the middle here and Bitcoin over here on the left. If Ethereum starts breaking down through that 4-hour moving averages there, I think we'll probably start taking out some of these levels I've highlighted. But that's going to be if this market interprets Powell as bringing the risk off, and we get it basically like another BART move back down. So we'll see. We're just basically in a balance rate up here with both Bitcoin and Ethereum. So we'll see what happens. The other thing to look at too is the Japanese bond yields. They got a cap at 5.5%, and it's been pressing back up to it. And over here is the yen futures, and they've been trying to hold this channel. But if this thing pokes down, makes a new low, that could also be problematic, because Japan holds a lot of bonds, foreign bonds, and if they start selling those off, that can send a little bit of shockwaves through the bond markets globally. So that's probably a last resort thing, but it's on the table. All right, so we're getting some jig here, pre-announcement jig back and forth. Typically, you do get a push up before the announcement. Our 9:30 open is up here at 40.7775.
They dumped oil down 3%, so I think people are anticipating some bearishness there.
Mm-hmm.
I think we don't have enough time to get a pole out the door. I don't think at this point.
All right, we'll see what the announcement that you're gonna see the initial reaction right off the bat on the price. That's going to be the quickest tell as to what the algos are digesting, and it'll take about 10 or 15 seconds to start getting the headlines.
Here we go. All right. I don't know if the 1 minute chart might give me a headache, Phil, so I think I'm going to go to the 5 minute chart.
Yeah, 5 minutes better.
So just guys, the rule of thumb a lot of times is the initial move that comes out of the Fed algo usually is the move it's going to continue on with. And then you have reversal. Now he does a news conference too, so depending on the reaction, they adjust their whatever they're going to say in the news conference. They're ripping this thing up into the meeting here.
Yeah, so we're back to the open. This is really just a lot of pre-positioning going on here. I mean, you're getting like instant 5-point wiggles here. So the market makers have probably pulled back and the books are really thin here.
Yeah. Once this thing gets started here, Phil will have the floor. I'll only comment with I'm making money or I'm losing money. That's all I'll say for 15 minutes.
Well, our liquidity charts and everything, basically have been waving the red flag here. And the markets, they basically go up and down with the amount of liquidity available to them. And they've been pulling the liquidity back. So let's see what happens here. We're going to expect extreme volatility here.
Here we go. Remember, if we're wrong, Phil and I are going to start a new podcast.
All right, initial push down quite a bit there. Let's see.
Quite a bit.
See if we get a snapback. There's the snapback. All right, let's get rid of this announcement ticker.
Okay. Market's down. I'm closing my call position that I had as reserve. It didn't fill, so I am closing it. Cancel that order.
All right, they're pushing down. They don't like it. Let's go. Here we go. Here is the headlines. Interest rate decision, actual 4 point. Let's see. Raises by 0.25%. Upper bound now is 4.75%. Ongoing rate hikes will be appropriate. Fed repeats and anticipates that ongoing increases are appropriate. Let's see here. That's all I have. That's all I have for now. This is going to be really illiquid, so you're not going to be able to tell what direction this is going for a while. It went down to about 40.50 on ES, which was an area of support. Fed says inflation has slowed slightly but remains high. Fed repeats and anticipates that ongoing increases will be appropriate. Repeats job gains have been robust and the unemployment rate has remained low. See, that's what they want to fight and beat back down. So that's going to be hawkish.
Okay.
So far, as far as like we were expecting them to stay the course, the initial comments are telling us that. So you can see just a wild wick there on that 5-minute candle, but really not going to know until we start pushing either lower or pushing back up to the day highs. It's just really impossible to predict right at the moment.
Yeah, let me look at the 15-minute ranger, Phil.
Fed says that the Russian war against Ukraine is contributing to elevated global uncertainty. Adding that it's extremely concerned about the inflation risks. So they're saying the war is concerning. Fed fund rate futures have priced in a terminal rate of 4.94%, Bob.
Yeah. And this is the thing we were talking about, guys. If you guys watched the podcast yesterday, is that really smart money is saying we're not going to stop the short-term rate increases until July. And I think that's the June meeting. And then we won't start pivoting till probably September or October per them. So I think every month Phil and I will probably add that to the podcast to see what the what those funds rates are telling us short term, because they're almost prophetic. And also looking at it, the euro dollar contract, it looks out a year, basically tells the future a year in advance. And both of them said if we get a good January, expect a crappy February and March. And so that's kind of where we are. The fact that we didn't lift here, Phil, is telling, because the general rule is to always try to lift, and they're not lifting it. I think they did all that in January.
I mean, the setup is buy the rumor, sell the news, right? So one thing we haven't seen yet, and of course this is still just part of the post announcement, algo craziness, but we haven't seen very much in the way of positive ticks since the announcement at 2 o'clock. Briefly it went positive, but it's been hanging out in the negative territory this whole time, which is a little different than the last couple FOMC announcements. Right now we're it's 4065 on ES, but that equates to 4050 on SPX, and that's kind of a key area because there's a lot of open interest on strikes there. And if this market starts to roll over, those puts that we're taking out will start to heat up, and then the dealers are going to have to hedge the increase in the value of those. So it turns into kind of a negative feedback loop the more we start going under 4050 on the SPX. So we're right on this kind of knife edge here. And it is possible that they park it here till the presser too, because then they want to hear how hawkish Powell is going forward. So interesting reaction so far.
Yeah, Tesla's still green, and Nvidia's still green. I'm looking at the Momos, Peloton's up 20% today. That hasn't changed. Rig's still up. So pretty amazing, actually.
Yeah, I'm gonna say I think what was just released is somewhat priced in. I think now we're gonna find out what's in store for the coming quarter.
Yeah, SARC's moved up though, which is a good sign for if you're bearish.
How's VIX looking, Bob?
Let me tell you, Mr. VIX is flat.
Yeah.
VVIX is up a little bit. So VIX is flat and VVIX is up. So
Fed fund futures are still pricing in a rate cut later this year. All right, more headlines here. In determining the extent of future rate hikes, it will take into account cumulative tightening policy lags, and economic and financial developments. I.e., if you keep pumping the market up, we're going to keep tightening.
Yeah, we're in a loop now where they keep tightening, but they keep being liquidity's not tightening as much as, and so they keep raising interest rates, but Wall Street still has money to play with.
Yeah,
which is a problem.
That's a problem for the Fed for sure.
Gold is flat. Now they're trying to lift it here now.
Yeah, there's zero predictiveness here stuck inside. For one thing, we're in the middle of the range. Another thing, we're right back to the 930 open, and you're basically now you have just some squeezing going on, and we'll see.
Yeah, and just remember, guys, we initial reaction was down, and that has a really high probability of follow through.
Yeah, typically what I like to see is you get the initial reaction. So our initial reaction low is down here at 40.53, which was an area of support that we put in the newsletter. If you guys want that newsletter, links should be in the description below. It's usually in our videos. If not, just go to tradegenius.co, and in the menu at the top, you can select newsletter. Now we're trying to probably get a high print, and so we'll have a low print and a high print going into the presser, and then that's what you basically what you want to see. Are they going to break down or break above that range?
Yeah, and that range I have is 406.53 and 402.61. So, and we have an algorithm that looks at levels, and unless that 15-minute 402.61 gets taken out, then we're not falling any further. So
they just went up to the overnight high, which is also right there at the daily close from yesterday on the futures. So they went right up to it. A little bit of pushback there.
let me look at the chat here.
Daily envelope high is up at 40.9125. That's yesterday's high. Fed swaps are not pricing in a 4.95% peak Fed policy rate. So a little change there.
So Jeff McCarthy, pension funds will be buying $1 trillion worth of bonds in the next 12 months.
The Fed voted in favor of the Fed vote in favor of this policy decision was unanimous. So everybody was on board with the rate hike.
They're trying to break the 5-minute ranger here now.
So far, the market's saying, cool, we don't believe you. Up we go. And Powell's looking at speech A and speech B, depending on the move into his presser. That's actually a thing. We joke about that, but that he actually did scrap his speech at Jackson Hole because the market was ramping up into the Jackson Hole meeting. And if you guys recall, it was a very short and to the point meeting, and basically said you're getting more pain. And that he had a longer speech written, and he scrapped it. He was just like, I'm getting my point across. So that is a thing. Let's see here.
Well, I'll tell you,
yeah,
my portfolio is hardly moving at all. Fast, the trading one and the long-term one. So
yeah, I think we're in balance here for the time being.
yeah, they're not going to do it, Fury TV. They're gonna do 3 more 25 basis point increases. They're going to get to their number around 5.25, 5.5, and that's it. And they have no choice. They have to then lower because I saw an article yesterday that if interest rates hit 10%, for example, 100% of the federal receipts would go to be paying interest expense. That means no government, just payment on interest, and that's Weimar Republic kind of stuff. So we know they can only take this so far before they have to yield curve control. Yeah, Kai, no, I closed those out about a week or so ago. They just weren't, just couldn't push it down. And then, Bitcoin's been holding up pretty well. Although today, I think there's some weakness coming into the crypto space.
All right, so we got this is our specials we're running. So if you guys are interested in getting into the room, you see in our podcast, if you want to get in the room and trade with us, we got basically bundles for everybody, different skill sets and different interests. Some are more educational bundles that have the training. Others are just to the point if you're interested in stocks or crypto. So anyway, that's over at our website, tradegenius.co. Check it out. The yen is hugging that bullish channel. Yields are holding there. I like to watch this because I think this can, if the yields start pushing up on the Japanese bonds over their cap, that's where we got to watch out. So back to the price action here. We've got overnight high here at 40. What is that? 40.86 approximately, and we keep pushing up into it, and they keep pushing back down. So we've got some resistance up there. And so I think we were establishing our range here now from the announcement. And I'm not sure if we're going to get a trend either way until he starts talking.
Yeah, Visa's down. Tech is up. Tesla keeps grinding higher. Moderna's getting hit. Chinese stock Baidu's up $16. Crazy. All the garbage stocks are up, Phil.
Why am I not surprised?
Let's see who's getting beat up here. Moderna, UPS reported they got beat up. Gasoline's down today. Don't get used to it. There's going to be a gasoline refinery shortage here coming up next 60 days. Us folk can't get a break. Oil's down. I wonder how many zero TT options are throwing at this right now, Phil. I will tell you guys, this is probably, I thought this would be the most exciting and meaningful Fed meeting announcement that we've had in years, and it's turned out to be the most boring so far.
All right. So since we're kind of in a holding pattern, that's going to be our FOMC announcement countdown there. I'm sorry, not the announcement. It's going to be the presser.
Yeah. Hey, Hotcake, I live in Southern California. It's a bubble here. So, but real estate has ended. And so in California, the way people make money here is that they make it with real estate, they make it with capital gains, and they make it with these high salaries. Real estate is dead, capital gains are dead, and they're basically the Bay Area is getting absolutely eviscerated. So, so it's going to be really interesting. They say it takes 9 months to start seeing that stuff cycle through employment, and these layoffs are coming fast and furious now. So it's going to be very interesting to see. So if you see me looking off to the left, I have other screens here. I'm watching the chart. So not that I'm disinterested. We just pulled back from that 5-minute range trader.
We're just banging the range high and low now. This is a lot different than the last two.
Hey, Jeff McCarthy, I'm going to be rolling through Charleston in April. So put a good recommendation for a restaurant in there if you don't mind.
Intel executives take pay cuts after disastrous earnings.
How you doing, tax partners? Welcome. Magnolias, thanks. Yeah, so I used to live in southern North Carolina along the coast, and my sister lives in VA Beach, And a guy I used to work with for 25 years just built a house on Bull's Head Island, and I'm gonna roll to Atlanta. So we're gonna do a tour from Philadelphia down to Atlanta, old stomping grounds. Should be pretty fun. Thank you, All Steakhouse, Magnolias. My wife wants fish though, so we won't go steakhouse. If you're in Charleston, you gotta eat the seafood. That I guess and the hush puppies, right?
Yeah, so we're just ranging here.
Yeah. And, uh-oh. Tax partner saying, "What's up, Bulrus?" Is that Jeff? Tax partners. Well, that's good to know.
So the thing that was
By the way, this
concerning,
is water. This isn't vodka. That comes later.
yeah, that we haven't. If it shot straight up, I think Bob would be just hitting the bottle.
I think so. I'm leaning short.
One thing that's been concerning to us is that the liquidity, if you guys notice, the blue stuff has been dropping. Now, this is something we update in the newsletter, but whenever we have a situation where over here are, this is kind of how we like look at breadth, and if breadth gets overbought, we look at that as a warning sign for a market pullback. And you can see we've been pressing up against this overbought condition. So it's really been overbought. Now, I can stay like that in a very strong trend or like a blow off move. But whenever we get that in combination with the euphoric reading down here, this is fair value. That combination is usually pretty bearish. Under normal circumstances, one or the other alone would be enough to give you a decent pullback, like, 3-4 day pullback straight down. But both of them like this going into a huge announcement is quite the setup. So we just have to kind of lean on the technicals, and all we have are the probabilities, right? So ultimately, over the course of the next few days, we're expecting this to roll over and retreat because we're not seeing any big inflows on the liquidity that's available to the market. The Treasury looks like they're building up their balances again. The banks have been parking more money back at the Fed overnight, and the Fed's rolling off their balance sheet. So all of those things are provide less liquidity for the market to play with. Bob, you're looking at the Kona Resort for the training in Hawaii?
Yeah, Royal Kona Resort, 31st of May, June 1st, June 2nd. And minimum 20 people, max 30. So 3 days of training. We're going to do 4 sessions a day. Basically, breakfast is included, Phil. Continental. And then we'll do 2 sessions in the morning lunch, which is included. And then 2 sessions in the afternoon. So get rolling around 8:30, roll out of there about 3 o'clock. So people can enjoy the islands too while they're here.
Dollar's getting a little
We've done
lippy.
a couple in the past. They've gone pretty well.
Yeah, those have been really constructive. Everybody walks away with a really, really eyes open on some things.
Yeah, we've made some lifelong friends from it actually too.
So crypto's holding up. And we're just hovering around RTH open, regular trading hours open. That's the 9:30 a.m. Wall Street open, and we're just chopping there. So Powell will come on, and then we'll get another flurry. This is where we're going to get a lot of headlines. We get a few of points, headline points off the actual rate announcement, which again was 0.25%. Rate increase, which was expected. And they also said that expect more rate increases and that inflation is still a problem. That's the summary of the comments from the rate announcement. So now the rate announcement's out of the way. Very obvious to me, this market is now looking for what Powell's going to say to trigger the next move. And I'll tell you a little secret. This move's probably already pre-programmed. It doesn't matter much what he's going to say. This move is already probably baked in. They're going to just use him talking to create a liquidity event.
Yeah, they got the algorithms lined up. So Phil, you're not wearing your hat. That's probably why the market's not moving.
I didn't wear my hat last FOMC. I got to keep tradition alive.
Man, we are just stuck at 40.75.
We are. Bob, I'm going to leave you with the mic. I'll be right back.
Okay. Huh. That's nice, Steve. If Hawaii is a 20-minute plane ride from you, you must be flying on the space shuttle, unless you're on a different island from Hawaii Island. So you on Maui? Yeah, no hummingbird. Do you remember from last month? That's too funny. And my wife's broken wrist is healed too. Yeah, I go 1 year to Maui, 1 year to Big Island. So I don't know if you guys know that, but Phil was born on Maui, and up until about 3 years ago, he's lived in he lived on the Big Island. His family has a company called Clever Construction. I don't know if you guys ever heard of that. Pretty much custom built homes. So Phil's an island guy. Now he's up at the island called Idaho. You're welcome. I love it when I'm in Hawaii. I love getting up at 3:30 trade. Market's closed at 10 or 11 in the morning. You get on your day, 3 minutes before the presser, and we're just dead flat. Pretty amazing.
Zero Hedge says the one word change from the pace of future rate hikes to the extent of future rate hikes. So changing the word from pace to extent tells you that when the minutes come out, we'll likely read that officials have begun to debate when to pause. Says Omar Sharif from Option Insights. Man, they're just scratching for a pivot.
What do you mean by are they done buying? The Federal Reserve is going to have to buy every bond out there in the next couple of years because nobody's going to want them at this price.
That's why we look at Japan, and that it's exactly what's happening over there. See, they gotta over here on the left is their bond market. So if people sell their bonds or don't want their bonds, then their bond yields increase. Okay, because you're trying to attract buyers, and you'll notice that it jumped up here because they said we're going to let the bond market go to 0.5% for a yield cap, because they were just not winning the battle at 0.25, and that was going to create problems for the yen. So they come up here. Now, what you have to realize is they're basically saying we'll print as much yen as we need to buy all the bonds that we need to to keep this bond yield under 0.5%. So it devalues the currency and it creates inflation problems. And we're of the mind that sooner or later, so that whole operation is called yield curve control. So we're of the mind that sooner or later, most central banks are going to have to get in on this, including the Fed. And that's when that happens, that's when you're going to see things like Bitcoin and gold and other hard assets really start to take off. And it's just inevitable at this point.
Yeah, speaking of gold, it's moved up $1 here. Oil they still jammed oil. Dollar's still red. Yen is still green. Well, the FXY, I should say.
Yeah, look at the wicks though on DXY.
I know. Copper's down.
If DXY starts pushing over 102, buckle up.
Yeah, Natty's down. The VIX is going flat now, Phil. It's down a little bit more than it was. VVIX just went down a little bit, which makes sense because we have a known event. Looking at all the sectors right now, every sector, corn's up, wheat's down, gasoline's down, home materials are down, staples are down, consumer discretionary down, financials are down, healthcare's down.
All right, so presser time, he's not out yet, so
good thing he's not Biden or Obama. It could be like 4 hours from now.
Yeah. Trump too. That guy was like, you could just count on him being half hour every time, hour.
Yep. Well, people.
There we go. All right. We're not gonna listen to the live feed because we'll get the cliff notes here. But let's see what happens to the price now.
Phil, Josiah Smith said to check out Pilgrim's Market in Coeur d'Alene.
Pilgrim's Market.
Phil lives up in Sandpoint. He almost has to
Powell strongly committed to bringing inflation back to target. More work to do. The Fed is dead set on reaching 2% inflation target. Full effects of rapid tightening yet to be felt. We've taken forceful actions over the past year. So far he's coming out pretty stern. I already said that. Just waiting for another I'm waiting for another headline here. We've covered a lot of ground, but the full impact is yet to be felt. Market, as you can see, is not reacting that well to the hawkishness. Minus 800 tick. That means that's broad selling. We have more work to do. We continue to anticipate ongoing rate increases appropriate to get sufficiently restrictive. We will likely need a restrictive stance for some time. We continue to expect ongoing increases necessary to achieve a sufficiently restrictive stance. The economy slowed significantly last year. There's our first negative 1,000 tick, Bob.
Yeah, here we go, guys.
See, this is what we were telling you guys. Holding. They were holding here. Okay, what's the dollar do? If dollar goes over that. Where'd you go, dollar? There we go. Yeah, see, Bob, if we pop over dollar 102, I think that might be a little problematic here. See what happens.
VIX is up 1.5% now.
We have not taken out the initial reaction low. Let's see if they do here.
Okay, once we break 40.50, then
lots of negative ticks. There's the range low. Are they going to break it, or are they going to reverse this back up? Both
buckle up, Buttercup.
Both are plausible. This thing, huh?
The 401 sold puts have jumped up in value 30%. Okay, that expired today, Phil. So I think if we break the 50, what was our other level here?
Boom.
Just
There we go. Another
and I'm
1,000
out.
tick.
Yep. Here we go, guys.
Inflation is well above our goal. Wage growth is elevated and the job market is extremely tight. And now that's wage growth versus core PCE sans housing is what Powell really looks at. So him telling you that wage growth is a problem means that he's not looking to be soft anytime soon. Consumer spending appears to be expanding at a subdued pace. Job growth has been strong. So those are all fuel. That's all fuel for the Fed to keep hawking. Okay, so that's all bearish. Labor demand far outnumbers supply. Okay, that's bearish because that means strong job demand still, and he wants unemployment up. Okay, he wants unemployment up. He wants wage growth down, and he's not getting it. Is what he's telling you. All right, so we stabbed down to 40.48. If we lose 40.50, which is what we're bouncing off of here, the next area below is going to be around 40.15 to 40.20 down here. Okay.
Yeah, VIX keeps rising, so I would imagine that they're going to take another stab down on this.
Powell says we will require significantly more evidence to be confident that inflation is on a downward trend. He says recent inflation data shows a welcome reduction in inflation. Long-term inflation expectations remain stable. Inflation slowing in the last 3 months is a welcome change. And there we go, right back up.
This is really choppy.
Super choppy. It's going to be super choppy, super liquid, extremely volatile, and I would expect it to remain that way for the time that he's talking. Once he's done with his prepared notes, he'll take answers or questions, question and answer session. Powell says Fed is highly attentive to risks inflation posed to their mandate. We are extremely concerned about the risks that inflation poses on both sides of the mandate. It'll take time for the full effect of our actions to be realized. So he's saying that basically what he's saying is the market hasn't really felt the effects of what they're trying to do yet.
If they keep buying the dip, it won't.
Yeah, that's what he's saying. Basically what that means is he says, as long as you keep buying the dip, we're going to keep tightening and you're going to draw this out as long as you want to until you get your algos under control.
Yeah, they just did a 20-point move here.
The lags fed into our decision to raise rates by a quarter point today. So they're trying to not over tighten. They're trying to keep it where they don't get over their skis as far as tightening, but they want to continue to tighten. So they're just trying to see if they can, if regulating quarter point here will help. So yeah, so basically into our ES support zone and 25-point bounce.
Yep. All they did was clear out stops.
Yep. So zero direction here so far. Reducing inflation likely to require below trend in growth. We'll make decisions meeting by meeting. Job gains have slowed and nominal wage growth too, but labor market's still out of balance. A slower pace here allows us to better evaluate our progress toward our objectives.
Whoa. Big rip. Big market rip right now.
So we had negative 1,000 ticks. Now we have positive 1,000 ticks. Yeah, they're just clearing stops.
Yep.
So that pushed up near yesterday's high. If they're gonna really just rip this thing higher, then this won't stop. And this is what I mean. Like
I think,
until they're done with the presser, it's impossible to gauge direction. It's just
yeah,
impossible.
they're pretty mealy mouth right now too.
He's probably getting the thing in his ear saying, "Well, no, you're not hawkish enough." History
Yeah.
warns against premature policy loosening. We will stay the course until the job is done.
Yeah.
So there's your stay the course. We've taken forceful actions over the past year. We've covered a lot of ground. Full effects yet to be felt. We're committed to inflation getting back to 2%. I mean, that's a lot of work to get inflation back down to 2%. So, I mean, you know, if he's saying that we're not doing anything until that's accomplished, then I think you're buying into a market. If you're bullish, you're on borrowed time here.
They're not buying it. The market's saying you're toothless, Fed.
Powell's now saying we are not yet at a sufficiently restrictive level on rates. Now they're back to that. It's important that financial conditions continue to reflect the policy restraints we have imposed. So that financial conditions that tick down. Goldman Sachs has a financial condition index, and that's printing softer than it was back last quarter. So it's actually going the opposite way of what the Fed wants. But for him to say that they're not at that's funny that he says they're not at restrictive, because some of the Fed speakers lately have said that they've entered restrictive territory.
Jeez. Well, they hit 4,100 again.
Yeah, it's super volatile. It's a good thing that disinflation we've seen so far has not come at the expense of weaker labor market, but this disinflationary process is in the early stages. Expect housing service inflation to continue to rise and then fall. However, we have yet to see disinflation in core services other than housing.
I mean, that's pretty negative. No, they don't believe them. Gold is up. Gold miners are up.
Euro
They're
dollar
pushing
jumps
up
to
right
its highest
now.
level since April. Powell says it's encouraging to see a disinflationary process underway with strong labor market.
The market has just pushed up 45 points from its lows.
They may want to double top. Double top is the monthly envelope high there on the chart, guys. So 41.10. They might try to grab that. We've got levels up here above at 41.15.
Yep, hit 41,625 is the high so far.
ECI and average hourly earnings are down from highs but remain fairly elevated. Our focus is not on short-term moves but on sustained changes to financial conditions. The job openings figures from the JOLTS report have been quite volatile. All right, now I'm going to say if this comes all the way back down, then the move is probably down. I'm going to stick my neck out
Well, this
there.
isn't unusual that the day of the Fed meeting, they try to keep it elevated, and then overnight, tonight,
Right.
they just dump it hard.
Right. We predict wages will decrease. By many indicators, the job market is still very strong. JOLTS job opening numbers have been quite volatile. I think we already said that. Disinflationary process is in its early stages. That's a significantly hawkish statement. I'm surprised the market is holding up.
Wow, we just hit 4110.
All right, they took out the previous high. So if that's what they wanted to do here and just get that number, then we are going to see this peter out up here, I would imagine, and roll over. There's significant resistance here. These lines
I have a
represent.
short sitting at 41.15. I don't know if it'll get there or not, though.
This is basically a wall of open interest on option derivatives. We haven't made a decision yet on terminal rate. There we go, Bob. Remember talking about they might raise the terminal rate?
Yep.
We haven't made a decision on that yet. We'll look to data between now and March. In other words, keep pumping it, and we're going to keep raising our terminal rate. So the terminal rate is where their market's looking for them to stop. Okay, and so right now it basically indicates they'd hike 3 more times, quarter point, and that's it. But if they're going to raise it, then that kind of blows that out the window. Could certainly be higher than we anticipated in December. If we need to move rates beyond the December level, we'll do that. So he's basically telling the market that you could get more than you think you're going to get for rate hikes.
I wish he would just come out and tell them that.
I mean, he's telling the market that you're not getting any breaks from us, and the market's just going up. So we saw this before during FOMC announcements. I remember I would be like, there's nothing dovish about what he's saying. The market's up during him talking, and then the next day, boom.
Well, December too. It was up in December, remember? And then he got done talking. The next day, the market crashed. So all the way into Christmas.
Powell says we don't want to over tighten, but we have the tools to help us if we do. Which means that they would err on the side, and that's something they've said before. They'd rather err on the side of over tightening and then back off versus not tightening enough and not getting the inflation under control.
Yeah.
We have no incentive to over tighten rates. But we have the tools to help if we do.
Yeah.
You have a credible story about disinflation in other sectors. It would be premature to declare victory over inflation. Core services ex housing are subject to inflation. The rate is still 4%. We still have a lot of work to do until we see all aspects of inflation coming down. Well, we have a lot of work to do still isn't doing anything to this market.
Yeah.
The euphoric reading here is probably going to hit an all-time high.
We just hit 41.23.
Yeah, so we're outside. We're way outside the upper bounds of what we should be seeing on this move without the whole derivatives complex shifting up.
So they're clearing out anybody who was thinking about being short for this week are gone.
Fed says for the first time we can declare that a deflationary process has begun. That is like the most bearish thing you'll ever hear a Federal Reserve chairman say, and the market's going straight up.
Yeah, 41.25.
But can you remember the last time a Fed chairman says that the disinflationary process has begun? They're super afraid of that. Like that tells you how fearful they are of this market going up.
Yeah. Well, I think if they're fearful, they would have raised higher. So
I agree with you. But if the deflationary process has just begun, markets don't go up in a deflationary environment.
No.
I think that's why he's saying that. He's trying to cool the jets here.
That's what 1929 looks like.
We anticipate disinflation in the housing market. Um, we can expect housing services inflation to move up for some months.
Um, they're jamming all the high betas right now. Snow's up $6. Block is up $2.
Yeah, this is. I think this might be just like the blow off.
Yeah, this is the probably the crack up here. So I'm trying to look at what else is going up here. I mean, steel stocks are going up. Tesla's up $5. Uh, let's see if oil's pushed back up higher or not. See, one thing too, they're not talking about is China. The inflation China's going to bring it. Look at CCJ's up 1.5%. Oil's coming back now. Coinbase is up $2. I mean, CRM, they're laying off employees left and right. They're going up. CrowdStrike's up. So this could be the like I said, potential 4180. But the day's not over yet, too. He hasn't taken any questions yet, right? Or is that what he's doing now?
It looks like he's talking to reporters, so I think he's taking questions.
Ah, okay.
Look at the euphoric print. I mean, it's the only one higher was in April.
Wow.
And you saw what happened then. How's that sound go? And yep, we're making August top look mild, and as far as just being. So this basically is telling you guys overbought relative to how much liquidity is in the system. It's really high here. So that happened in August, and then sharp reversal. So sometimes you do get a persistent move to finish it off. The other thing too, Bob, on the S&P 500, which they just finally took care of, was remember that other double top we talked about? They got it. They finally got it. So it is.
That's right. They did.
That's.
But I'm looking at the stuff that's up versus stuff that's down. Like all the Nasdaq high beta stocks are getting jammed. But like Caterpillar's down, BTU's down, oil's down, Coinbase is up. It's anything they can get high volatility on their after right now.
All right.
Let's see here.
So obviously this is just jamming right now, and what I look for in this situation is are we trapping buyers up here at these levels? And if so, then if this comes back down inside that monthly envelope high, basically last week's high, then that's potential setup for a trap up here. And then this pulls back down, and if it gets back down, I'm looking for basically a pullback into this area for a bounce. But basically the algos all said, think of the algos as a bunch of wildebeests out there in the African plains, and they're drinking water at one of those mud holes, and a crocodile, flies out of the water, and they all take off running. It's kind of like how it works. The algos running the price up and down. So
we just hit almost 4130 now. So all our silver and gold miners are up. Uranium's up.
Let's take a look at Bitcoin. Bitcoin, normally that bar there, 1 hour, that's usually a bullish reversal. So, but again, Bitcoin's just, at this point, Bitcoin and crypto for that matter is just at the whim of the market right now in liquidity. So again, I don't think we're out of the woods in terms of being overbought here. And like Bob said, a lot of times the next day is, basically they pull the rug. Dollar's broken the support level, though. I think that's part of the problem here is dollar's just taken out. Now, if dollar reclaims this and gets back over I'm going to say back over 101.60, this would be a head fake lower, and then you can have a potential for a big move back up. But otherwise, if it doesn't do that, there's some air under here for the dollar to drop.
Yeah, and then our gold and silver miners and commodities will go. So steel's up, silver's up, gold's up. Let's see what copper's doing. FCX just went green. So
Dollar just stabbed the swing low.
GDXJ is up 2.16%. Great Plain Partners, ethanol's up. All my shippers are up today. JP Morgan just went from red to green. Dorian, Phil, that thing is up 11% now.
Good job, Jerome. You've just cranked up inflation.
I don't think he cares. I think he wants inflation to go up so they can get those rates up to 5.5%.
Yep. Yep. That's gonna put further pressure on housing. Fed is not exploring. So he's talking again. Fed not exploring pausing then restarting rate hikes. Policymakers did not see this as an opportunity to take a breather. He says Congress needs to raise the debt ceiling. No one can assume the Fed can protect the economy if there's a default. The only way forward is for Congress to increase the debt ceiling. Fed is discussing a couple more hikes to restrictive level.
We're getting our first 5-minute red candle here. Nope. Still holding.
When asked about a pause, Fed policymakers talked about it. We spent a lot of time talking about the path ahead. Policy is restrictive, and it's difficult to determine how much is too restrictive. Real rates are now rising across the yield curve. See, he said, staying the course, a lot of work to do, inflation's still persistent, the disinflationary process has begun, and he can't get this market to go down.
Charles Etsy puts, they're always interesting. So we have our first red candle here on the ES. So
U.S. Fed terminal rate falls to under 4.9% amid Powell comments end of 2023. Which is funny because he literally floated the idea that that could potentially go higher. It's a very interesting. The market is definitely just full on playing chicken with them.
Yeah, and they're well, we'll have to. We'll see what happens on Friday, right? So.
Yeah, that's the next big. That's the next. With the 80. What is it? Job numbers on Friday.
Yeah, but we have to see the follow through in this. We just dropped 15 points on ES, just like nothing, like butter.
Yeah, it's gonna get weird. So here's the thing: if they're gonna keep pushing this market up, then basically this area holds anywhere in between 41.10 and 41.15. Okay, if this starts to break back down, I kind of look at this as a trap, and what I mean by that is the late bulls came in here buying this, and their stops are under here, and then they roll this over. So that's the risk at getting long up here. This has, like, if you're going to get long here, you're looking for this area to hold, and you don't want to be in this if it starts to roll back over, because a lot of times what we've seen off of these FOMC announcements is you think you got a direction and then they reverse it really hard. That's why I was saying if this comes back all the way down from where we launched, and we get back down to 40.52 at any point in the next day, that's probably going to open up a move down and break us through 4,000 on the S&P 500, in my opinion.
Yeah, we'll
But
just have to see. I mean, nobody should be sitting here saying, "Geez, I better get long the market." As we're going into a new bull market. This is all people getting squeezed out of short positions. So
Fed says, or Powell says, overall, in my opinion, a return to 2% inflation will not be sustainable unless the labor market is better balanced, meaning he wants higher unemployment. So basically, he's said everything is still what they are looking for as far as maintaining their hawkishness. Okay, so but now the market's challenging them as far as like, well, that doesn't really mean anything.
yeah, well, the real reaction usually comes tonight. So I can't tell you how many times you react to Wednesday. The market crashes on Wednesday, everybody gets short, and then Thursday they rip their heads off, and vice versa. That's what happened in December. They the next day is usually different than the day of. Remember, our first reaction was down on Powell's move.
Most forecasters believe unemployment will rise slightly. There is a path to 2% inflation without a significant economic downturn. Define significant. I continue to think that there is a path to a soft landing. I mean, you can say that, Jerome, but everything you guys have predicted in the last 12 to 18 months hasn't come to pass. In fact, quite the opposite. Inflation was supposed to be transitory. You're not going to get 75 uh, basis point rate hikes. I mean, so they're
Lower for
predictive.
long, lower for longer.
Yeah. So none of
Yeah,
what they've said has come to pass. So you just have to assume when they says stuff like that, probably the opposite. Powell says it's possible that the economy will need to slow more than expected, but that is not my base case. So a little bit of a fight here on the dip. It is pretty important right here to see if this holds or not for higher. Otherwise, if this falters and starts to fall back down, like I said, I would consider that a trap. And then you have to start watching to see if that's where like this daily envelope high I would look for that to hold support. And this is a 1 minute chart, so we're looking at very small time frame here, but due to the volatility, you can do that.
yeah. The thing, hot cake, is that I don't know if they're losing trust in the Fed. I don't think anybody ever had trust in the Fed. I think they're losing their fear of the Fed.
Powell says positive growth, in my opinion, will continue, but at a slower pace.
I mean, you have China and Japan printing currency like it's going out of style. We just push back up again to 2025, 2125.
Yeah, so
Oh,
strong
yeah,
trends.
there.
You get the green cycle indicator, strong trends. So you're gonna get that bounce. This is what you want to see hold. If you're looking for higher, got a level at
Yeah,
4140, a level at 4165. Quarterly envelope high. That's last quarter's high up at 4180.
yeah, that's what I'm saying. 4180, that dovetails in with them crushing volatility by Friday. So, which is amazing. Yeah, so I'm long commodity, short tech, so I'm just in a big battle right now. Huh.
Factors will support positive growth this year's. There's lots of spending coming in the construction pipeline. The stock's up, dollar down, as Fed hikes as expected. Powell says there will not be a light switch moment on when we know inflation is sustainably coming down. You know, Bob, maybe what they did was they're like, all right, let's just do the 25 basis points so that we're not getting too overly aggressive. We're going to see what the market reaction is if it's just a sell the news event. If they don't, you know, they can come in. See, the thing is, they can come in between meetings too and say, look, we gotta crank things up more, and that's one of those out of left field things that can smack the market around.
Yeah, I mean, sounds like somebody has a target in mind here that's just rolling over whatever the Fed's saying. So,
What's interesting though
well,
is, like, you know, you have the JP Morgan caller at 40.65 on the S&P 500, which is we dipped under it briefly here and then we bounced up. And so normally whenever you get a move over their caller, it's somewhat short-lived.
yeah, so I don't think people understand that. Right now, J.P. Morgan's losing money on their biggest portfolio, and they have the ability to fix that problem. So,
Powell says we will also be looking at the next employment cost index report. Yesterday's report was encouraging because it showed wage growth, which makes no sense because he wants wage growth down.
I guess I should have kept those 408 calls on.
As accumulated evidence comes in, it will be incorporated into our outlook and policy. Financial markets have a very different job to us. Our focus is on bringing down inflation.
Well, he's doing such a good job that the stock market just went up another 10 points.
U.S. stocks extend gains up 1% on the S&P 500.
Yeah.
Powell says this is not a standard business cycle. It's unique, and we can have no certainty in our forecasts.
Hey, Greg. How you doing? Good to see you, guy. How's the trophy husband business going, Greg? It's just really weird. So, but silver and gold love it. The miners love it.
Yeah, let's take a look at let's see what Bitcoin's doing here. Pushing up. For a level above, there's a couple of things. One would be if they're going to tag that previous high, or a lot of times what happens is, let me make this a little bigger. A lot of times what will
I think
happen.
they're going to take this. They're only 40 points away from 4180.
You look for areas of previous breakdown, like the weekly open. You know, that's a potential target here on Bitcoin.
We just hit the top of the Lin Reg line. So we just hit the top of the channel in the 1 minute, and the market recoiled on that.
Yeah, so remember I was saying this area needs a hold for support, and that's exactly what happened. We are getting a little toppy here. So down below we have these, basically you can look at this as like cycle indication. So if the cycle is getting toppy, running out of steam, getting exhaustive, things turn this pinkish color, and we get these gray bars that come in. So there's another one there. So the bottom one is the strongest one. The top one is kind of like the most sensitive, and then we have like the one in the middle is and in between those two readings. So when they all line up, if you get like all of them lining up at once, that's very strong, and typically you'll get some kind of reaction there. So I do have a level here at 4140, where I would expect to see some kind of reaction.
Yeah, we just keep hitting it and reacting on it now. We're at 4142 now, Phil. I wonder if this is going to be the blow off top today.
Must be. Given our outlook, we don't see cutting rates this year. There must be in his ear going, the market's going ballistic.
Yeah.
We see subdued growth, no recession, and inflation coming down slowly. So you're going to see a recession 100% guaranteed.
Yeah. We're coming up on 1.5% now.
Market expects inflation to come down quicker than we do.
Is that what he just said?
Yep. This is as hawkish. He's more hawkish in this FOMC announcement, in my opinion, than the previous two. And the market's just going like, that's nice.
Well, maybe they're just pressing it so they know that time is short. If the devil just got thrown down to earth, he knows his time is short.
All right, so now we're getting a little bit of a reaction here off that level. Again, it's a 1 minute chart.
I don't know why Powell doesn't just say, I don't know why you guys are buying stock here. You're crazy.
So there's not going to be any chance of a pause between meetings. We don't have any pausing or cuts this year. Well, he said cuts, right? No cuts this year. I don't see signs of a wage price spiral, but once you see it, it's too late. We can't allow that to happen.
Charlie, Bruce has always been a bull. Now his income depends on it.
Let's see, our euphoric reading. It's getting up there. We actually had a slightly higher one in April, but by that point we were already rolling over. So it's taken out. Oh, you know what, Bob? There was also that gap up there from August. There's a gap. This is gonna let off some steam. The market just doesn't run away from liquidity. I mean, when it does, there's a pretty violent snap back down. You guys can kind of see how it looks here. So they've cleared that high there. That's what happened in August too. They went up. We had this double top here, and they grabbed it, and then that was all she wrote. So they grabbed this double top. They grabbed that high. So that's some liquidity there that they've grabbed. And then basically, then when we start getting moves below the lows of these daily bars, that's probably going to trigger a larger move back down. So, but they're pressing. They are definitely pressing over the skis here.
Yeah, Jam Croissant said he had billion-dollar shops calling him because people are afraid they're missing the move.
Well, you'd think they'd know better.
I know, but
like
people they're emotional.
Yeah, like you said too, the whole market infrastructure rewards risk taking.
Yeah, you get fired for missing a higher move, but you don't get fired for being part of a down move because you're in it with everybody.
Yeah, so the
you
market's
just don't
drawing.
Want to be a whack-a-mole.
Right. Yeah. If the market's drawing down, you don't have to outperform. You just have to keep up with the Joneses on your drawdown. but if it's going up, you better be beating everybody.
Say, I'm all in on oil, so
Powell says more
I am all
disinflationary
in on
pressures
oil.
could boost the economic activity.
Here we go.
All right. So obviously, like I was saying, the cycles on the 1 minute kind of topping out there at that level, right? So not a surprise. It's what's funny though is we're on a 1 minute chart. Normally, like a move like this, if you're just looking at the bars, is like 2-3 points. This these pullbacks are over 10 points.
Yeah, until we break a trend range here, we're kind of
Yeah, as far as like pressing
stuck.
into like the trend rolling over, I mean, you can when it's trending strongly like this, you can go down to a 30-second chart on our range trader, and like it's not even getting that far back, which it's really really tight. But that being said, at some point they'll give us a larger pullback typically.
Yep.
Powell said since December, financial conditions have remained largely unchanged. It's important that the markets do reflect the tightening that we are putting in place. I believe Congress will resolve the debt ceiling. All right, the news conference has ended. We'll closely monitor money market conditions as the debt ceiling talks continue. So presser is over. Now we're going to see the market if the market releases. Bob left. So a lot of times what we'll see in the past is if he's talking, a lot of times we'll see like the move sustain while he's talking, and then we see a little bit of a relief valve in terms of a pullback. So, I mean, that's obviously kind of what we're seeing here. Now we're going to see how much support we've got. So if it's a really strong trend, then the first thing I look for is if the 30-second buy zone holds. Now there's a lot that's been digested by this market, and we've gone up quite a bit. I mean, from where we reversed, we went up 100 points. All right, that's a huge move in a very, very short amount of time. So we'll see if this holds, but I suspect if we do get a bounce, it might be short-lived when we break down. But we are getting into this this area where we have the support zone that we bounced off previously. So we'll see what happens here.
We just dropped another, just 20 points, like nothing.
Yeah.
25 points now.
Yep. So this is the
30 points.
The post presser relief valve. So they're saying that changing the wording from the pace of interest rate hikes to the extent of interest rate hikes seems to be what the market likes.
Well, did you just hear what he said? He said, I hope the market appreciates that what we're trying to do here. Basically saying, are you guys absolutely insane right now?
Yep, I'm seeing let the squeeze begin. I mean, everybody's just full bull here.
Yeah. We hit 15-minute top of the linear regression channel too, Phil.
Well,
we're blowing through all the channels.
Look at the move. I mean, in less than like in about 45 minutes, you win 100 points. I mean, you'll be hard pressed to see a move that steep in that short amount of time anywhere in the market charts.
Yeah.
So that's quite a bit. All right, so there you're getting a little bounce there off that 30-second zone. Now this is where they're either going to run this right back up to the highs, or this turns into a failed dead cat bounce and rolls over. So a lot of times these are scalpable moves. I mean, we're saying scalpable, but this thing's just moved 10 points. It's hard. The ranges are so large right now, it doesn't look like much on the chart, but that's a 10-point move that you can scalp off that range or buy zone. Doesn't surprise me. But we're running now back up into this area that was holding as support. So let's see if this area now turns into resistance right here, and they're poking back above it. So if this is going to reject, I would imagine it rejects right in here somewhere, pushes back down. Otherwise, it's going to reclaim that, and that opens up for a move to retest that high.
All you need to know is Silvergate is up 12.5, almost 13% today. That's all you need to know.
Yeah,
Silvergate Bank.
That's a horrible stock right now to own.
So Peloton was up 20% today. Probably even more now, I bet.
The reason why the market, guys, the reason why the market is where we are is because the Fed pumped in so much liquidity. So I think some of you guys that watch our podcast have seen this, but if you haven't, so this is just to put it in perspective, right? When they talk about inflation worries, this is where we had the great financial crisis. Okay. This is them basically print, right? So we went from a fairly normal market where, this was the liquidity situation beforehand, right? Market just did its thing. Then the great financial crisis, and that's where helicopter Ben, right? Helicopter money, poof. And they never really stopped. And the market has just been, except for the only exception would be in 2018, they were trying to withdraw the liquidity, and the market was doing okay there for a little bit, but then we started having these hiccups in the market quite a bit. So without that sustained liquidity being poured into the market, things get unstable. So here's COVID, and this is what they've done, right? This is the cause of our current inflation problem. So we've pumped from these levels, all right? And this is where liquidity currently is. So, if he's worried about inflation, then they got to go back to pre-COVID liquidity levels, and we're nowhere near that. And so that's why we say it really comes down to how much liquidity is in the system and whether or not they're very serious about taking it down. As you can see from our last low, basically last summer, if you just draw a line straight across, it hasn't really done much as far as terms of, net up or down. But more recently, we were starting to get this pullback. And so what we're looking for is we have these regimes where we pulled down significantly over the course of weeks. And so, we had one here, we had one here, and then we kind of gyrated up and down, and so did the market. So now we're looking for, if we get another liquidity regime drop, which takes out that end of year hiccup low. And if it does, this market's going to take out that previous low we have down at 3,500. So we're going to get another liquidity update tomorrow that will kind of give us a more, a clearer picture. I think the Treasury needs to get on board with pulling liquidity out of the market if we're going to see this thing keep moving down. So anyway, that's just some perspective for you guys of if they're really serious about inflation and getting excess liquidity out of the system. We got a ton more to go. So just keep that in mind. All right, so back to our 30-second chart, kind of battling that previous area that we broke down. We're getting towards 330. 330 is basically the start of the last 30-minute period in the market. And a lot of times what we'll do is we'll mark off that 330 open. We were talking about this in the room yesterday. You'll get a move away from the 330 open and then a round trip back to it. So let's see if that happens today. I'd still be on bull trap alert up here above the monthly envelope high. This really needs to turn into support if this market's going to go. If it does, then 4,200 on ES is attainable. If we start losing this and we flip this whole area back into resistance, then to me that's a bull trap, and you got to start watching to see if we take out that 40.50 low from the announcement. And if we do that, we're probably going to head down, and 3,900 on the S&P 500 would be the first downside target, followed by 3,800, and then from there we like to see what the positioning is. Are they is the options market moving their open interest walls down? If they are, then that's probably going to drag it down further. As of right now, we're over all those hedge walls.
Yeah, I'm going to take a look at the option contracts right now, Phil. Let's see here.
So, okay. So it's thin air basically up here. Be interesting to see how this market closes in the last 30 minutes.
The call buying has stopped as of 3:10 p.m. So put buying is flattened. So that's kind of where, and the net shorting of the market is done. So we'll see how this plays out. I can see the market flow right now. So the algos basically took off from, what time was that?
Let's see here.
Yeah, at 14:30, the algos went straight up, Phil, and now they're starting to come off of that move a little bit. So we'll see what that means.
Yeah, so they're 30, when the 30-second buy zone is holding, you got a really strong trend. And the 15-minute is starting to crank up. We watch for the 15-minute to basically get embedded. What I mean by that is if it stays, the coloring stays solid for a number of bars, that typically will give you an opportunity to target a pullback like here. That's embedded, and then what you're doing is you're looking for a pullback to that 15-minute zone. And so that's when this starts to roll over, that's when you can go short and target that lower. So those are some high probability setups with the system.
So the Fed's out of the game till March, middle of March now? They're every 6 weeks, right? So
I think it's every 6 weeks, yeah.
So now it's all earnings in front of us.
And yeah, earnings, and a lot of the forward guidance hasn't been so rosy.
No, negative 8.9% for tech. Zim broke over $20. Interesting. Likely pull back tomorrow. The shippers are all got a bid here, Phil, so all my shippers are doing fine. So on the option side, Phil, there's a falling away. It's getting more bearish here on every tick. So
how's VIX?
VIX is...
I can't bring up the VIX chart because that's on my other window, and TradingView doesn't have a live VIX chart yet.
Give me 1 second, I gotta go on my telecharts. VIX is at, where are you, VIX? Oh, they knocked VIX down 7%, Phil.
That's incredible. That thing is getting so low.
Yeah. Wow. So the silver chart, Silvercrest we bought yesterday is up to 680, which is kind of nice to see. SVM is up to 355. ASM is up to 78 cents. CCJ is up to almost to $29, guys. Beautiful.
So Bitcoin.
Zim's over 20 bucks. So
yeah, they keep this up, and you'll see Bitcoin and Ethereum break out of these ranges and press up into a higher range. So pretty interesting here.
yeah, it's probably not what he wanted to see happen.
Yeah, I mean,
Look, they freak out when you start seeing gold and silver move.
if his intent was, I mean, look, if you take it what he put out as far as what he talked about and the words he used, I mean, he was as hawkish as they've ever been. Yeah, he said no cuts this year. Inflation's got a long ways to go to fight back. He even floated that the terminal rate could possibly be looked at as far as the limit there, meaning that leaving it open that it could go higher. But at the same time, you know, if they really wanted to be super aggressive, they would have came out with 50 basis points as an example. So they knew the market was expecting 25, so they gave it to them. Maybe they thought that the market would sell the news. I think ultimately this does roll over, just because they're not putting liquidity back into the system at the moment. They've been pulling it out. And we'll get further confirmation on that on tomorrow's update, which will be in the newsletter. So that 30-second ranger held. Again, we were saying if that holds, then they go and they get back over that little point of resistance, right? Then they can attack the highs. So that's what's going on.
Yeah. I mean, look, they took the VIX down 7%. Masterful job, though. I mean, you got Wayfair up 10%. Wayfair. They sell furniture for homes that aren't being built. It's just the ridiculousness of it all is just becoming absurd.
Okay, so our 330 open is 41, 42, 25. And a lot of times, like I said, you'll get a move away from it and then a round trip back to it. So let's see if that plays out today.
I just got a 1 minute sell signal, Phil.
Yep, 1 minute cycles are rolling over. Now, normally you get like maybe 5-8 point rotation from the 330 open. On a day like today, that could be a lot more because the ranges are so wide.
EVXY is down 5%.
You know, the other thing too, Bob, is they could be like, all right, well, we've done the heavy lifting. Now it's the other central bank's turn. So like, because the ECB's got a rate announcement tonight, going into tomorrow, right?
Yeah, and they said they're going to raise too.
I think 50 basis points, but they're lagging. They're behind the curve.
Yeah.
So those ticks that you see popping up, that's just basically how many stocks are going up versus going down. So when we see 800 or 1,000, it just kind of gives us basically a barometer of the strength of the move. All right, so we had that rotation back up toward the 330 open, just shy of a tick. Traders are probably looking for this to tag that previous high. If it falters and falls back, you can get a lot of stops to get hit because they're gunning for that. As you can see, we just tagged that 330 open, so that's done. And there's the high.
Yeah, non-stop.
What's the 5 minute look like? 5 minute 5 minute is saying that the move is starting to exhaust. So we start getting a basically a divergent high on any moves going up on the 5 minute. That's what that's telling us. A lot of positive ticks, so there's some decent breadth to this move. But that's gonna probably send our breadth reading like to the tippy tops on this graph here, this overbought.
Yeah.
We
We
got
just hit 41.46 now. They're going for 41.80 today, Phil.
Yen's held that channel, so Yen for the time being is off life support. Yeah, Bob, as far as the indices go, I mean if they the other spot that they could try to get is that gap fill from August.
Yep.
And so that would be, let me go to this chart.
We're at 41.50 now. Yeah, they're going for 41.80 today.
This chart's a little.
Everybody thinks that Powell's done.
42.30 is the gap fill from August, where we broke down.
Wow. This is wild, huh? They're going for it. I have to say, I thought 41.80 by Friday, not today.
Yeah, next level. See how this level had a reaction off of it. So they've reclaimed that. Next level up here is 41.6475, and then the quarterly envelope high at 41.80.
These moves are just absolutely insane. I'm looking at some of the other things that I own. I mean, look at Dorian. Phil, I'm up $5,000 on Dorian in 3 days. I mean, it's ridiculous. Timken Steel's up. Zim is just is cooking now. Global ship lease is up.
Yeah, Bitcoin's
ADM.
pushing.
Biotech stocks are up.
Dollar breaking that
Symbiotics up.
101.50 zone was just uncorked things a bit.
So here's what's down today. General Dynamics are down. Canadian resource stocks are down. Caterpillar's down. Devon's down. Yeah, that's pretty much it. Oh, look at TLT. TLT's popping.
Being that we've had such a big move, I'm actually going to redraw the 330 open.
That one's pretty good.
It's I don't like a 20 point plus point move off the 330 open is way overdone. I can tell you right now, inflation ain't going to be coming down at this rate.
Nope.
Like his speech, I'm not sure if that was the effect he wanted, but he pumped the market.
So all my long-term portfolios, Phil, are just going crazy high. It's
What
just I'm gonna be trimming.
Yeah, I don't blame you. I think, I think what they thought was they could give the 25 basis points. That way they could be moderating the pace of the rates, and figured they could probably hit them with like just a bunch of hawkish talk like Jackson Hole. And the market just was like, yeah, no, you didn't raise, you weren't too aggressive enough on your rate raise. So we're running with it. That's kind of the
Oh,
initial takeaway
yeah.
here.
Jam Croissant could take a bow because
Yep.
he basically said we can be coming up the 4180 area, and he got within 20 points of it.
Was that on ES or SPX? Because there's like a 14-point difference.
He's at 3%, so I calculated it for ES.
Must be ES. Okay.
Yeah.
ES is the futures, guys. So there's a 14-point differential. There's a 14-point premium in the futures over the SPX price, which is over here. So 41.43 versus 41.56, but 14 point differential. And we're getting up to these are just those option strikes. So 41.48 is the next one here on the S&P 500 index itself. 41.65 on the futes.
Even the oil service companies are starting to come back now too. So I wonder if oil's coming back. This is he will not want that. Everything going up, including energy.
Well,
Okay,
if
BTU went back from down to flat now. CCJ's at $29.
you're not going to get a stock market equity rally and not have commodities go with it, that's, you know what I mean? That's just going to happen.
That's why I think they pre-sold oil before the open. I mean, for the presser, but it's up a buck from its lows.
That's actually pretty
And
impressive
we're
too,
not,
considering that the draw, they were expecting a negative draw, and they had a pretty good positive build.
we're at 41.63 now. So
if you think 41.80, Bob, that is last month's high, or I'm sorry, last quarter's high.
yeah, yeah,
So
that seems to be making sense to me. So if you're a bear, it'll fall off fast from there. If you're a bull, it'll probably, but the earnings are coming out pretty crappy. You'd have a hard time because you don't have the Fed at your back, so you don't have VIX at your back anymore, and so it's going to be.
Who's reporting today, Bob? Do we know? I don't
I'm not
remember
sure.
seeing any.
List.
I don't remember seeing any names that stood out to me. I looked at it.
No,
briefly.
yesterday Exxon reported and killed it, but they're becoming a negative. They've been bringing down their earnings estimates every day now for who's left. So I'm just amazed at CCJ, guys. I'm telling you, uranium. We did a report on it. I think CCJ is gonna, it will double from here. So I have a target of 58, and other people have much higher targets than me. And I got a sizable position in CCJ.
Yeah, Bob. I mean, we're 25 points or close. Yeah, we got to 25 points over the 330 open. that's that's extremely large.
Yeah.
Now I'm curious if we can get back to the 330 open off of that move. That is a possibility, gang, even though it's 20 some odd points higher. That's right now in this market, 20 points is really nothing. That's like a 5-point move on a regular day.
Well, we just did 10 points while you finished that sentence.
Yeah. Yeah. Sniper Cell coming in here on the 1 minute. That's the first one we've seen since this move up. Let's see what our 30-second. This is the minute chart, 30-second chart. And guys, let us know if you like this. If you guys want us to do this on the next FOMC, we will, if you find this helpful. And if you do find this helpful, we really would appreciate it if you guys would like, subscribe, and ring the notification bell, because YouTube likes that with their algo. So it just helps us out. More views we get, the more we can keep bringing you these videos every day. So would appreciate that.
Yeah, if not, my wife's going to make me get a real job, so...
But yeah, no, that would be very helpful. And this will be replayed or available for replay once we're done. Just under the live tab on the channel, I think you'll have it'll be loaded there.
We were talking about silver and cobalt, Canadian silver and cobalt, sub 3% today too. None of this stuff would bother me except that when crappy companies get to participate when they don't deserve it.
It's too frothy. It's too frothy. I mean, yeah. And especially when we've got liquidity levels at where they're at, it's just far too frothy. And the bulls are just like it's like drunken sailors out there right now. Yeah. All right, guys. So here's another. This is like a considerable pullback, similar to what we got back over here, right? So again, the bulls usually when we get into this zone, we're gonna see them step in and buy. All right. So the 30-second held once. That's great. The second pullback on a 30-second chart, because it's a 30-second chart, that gets a little long in the tooth. So I'm actually thinking that we're gonna pull back to the 1 minute. And if we do that, we actually do round trip that 330 open. This is unusual to have that big of a move off the 330 open. Really unusual. So I'm curious to see if they are able to get that round trip done. Normally during the day, the round trip might see something like that move there and then come back to it. Not what we saw here. That's just a really, really, really outsized move. What do you guys think? Back to the 330 open, 41.3875?
I hope so.
What are the comments saying? Thanks, guys. Thanks for liking and subscribing. I'm serious. That really helps us out. We're almost to 30,000 subs.
Yeah, get us over the top. Tell your friends.
Get us to 50. Get us to 100.
Look, the husband of the mayor of my town watches now. That should be good enough for everybody else.
Even with that amount of subs, we did take a little bit of break on the channel, which because we were just focusing on the room and the business and stuff like that. But now we're committed to staying with this. But you know, even at 30,000 subs, we don't get a ton of views. It's picking back up. We don't get a ton of views per video, but it's, you know, you think, oh, 30,000 views, you guys are cruising, but trust me, I think we'd make more money at McDonald's flipping burgers than the time spent producing the videos. But we know that's part of the
Yeah, we
gig.
don't know. Yeah, we don't make any money from doing this. We do this because we love it, and occasionally somebody will join the service. So, but it's a passion of ours, and so
Bob, look,
so tell your friends.
look, Bobby, coming back to the 3:30
Yep.
open, guys. Funny how that works, huh?
So that's guys, that's money in the bank for you. It likes to pin back on that 12:30. So, um, right there was a 20-point move for somebody. That's
What's up, Leaf?
good clever. If you're Slovak, you'd understand that.
There you go. Boom. All right. So largely mission accomplished there. But you see how that works? This is a very exaggerated example of that, but I'm not surprised. Not surprised at all. And beautiful sniper cell there off the 1 minute. Just very textbook there. Snipers love volatility.
Look, and tomorrow, if the textbook is still open, tomorrow we should be down 100 points on ES.
So okay, so here's another thing, guys. We're coming up on the 50 algo. What's the 50 algo? There's a or a sell program that fires off at 350, and then there's another one at 355. So 10 till and 5 till the market closes. So let's see what happens here. You see how there's an exaggerated move there? So that's on a 1 minute chart. You know, we take a guess as to like, oh, is the 50 algo going to be up or is the 50 algo going to be down? The last few days, it's been more up than down. A lot of times you'll see a split between the 50 and the 55. And we don't see too many days where both the 50 and the 55 algo fire red. So this is definitely going red. And then we call it, you know, we call it when the bar closes. So red bar or green bar. And we little game we play at the end of the day, whether it's going to be green or red. But with 20 seconds to go, this looks like this is pretty much going to be red. Now, remember I said the 1 minute, you know, because of the 30-second had already been tapped. I was looking for a pullback to the 1 minute. We're getting that. It's a pretty strong 50 algo move here, Bob. We're going down 10 points off this.
Yeah, you have to remember the 50 to 55 algo have everything to do with dealers imbalances going into the close. And so probably people are closing their calls now, and it's allowing the dealers to short the market into the close. So let me look on my option thing. Yeah, calls are going down now on the net flow. Puts are going up, Phil. So people are preparing for a reversal of some sort tomorrow. I'm not calling market crash. I'm just saying usually whatever happens on Wednesday, they reverse it on Thursday. So
Sefin Roths, you asked how dovish the Fed was today. I don't think he was dovish at all. I think he said their work isn't done. They're staying the course. There's not going to be any cuts this year. You know, some of that's been priced in, right? I think this whole market priced in what he said today, and this is a little bit of a blow-off move. But was he dovish today? I don't think so. Do you think he was dovish, Bob?
no, he only said one sentence that I didn't like. You know, other than that, he's pretty hawkish, and the market just ignored him. Or the algos just simply, you have to understand, there's one company out there called Citadel, and they decided that they were going to jam the market, and that's all you needed to know.
Right.
And now they're done.
Right.
They got their bags full. I mean, this is a 35-point dump from the highs here, guys.
Yeah, some of the other guys that are very serious traders told me they do not trust the move up. Negative 1,000 tick coming in here. That's the second one. So there's now we're going for broad squeezing up to running a bunch of stops. Third 1,000 tick.
Calls just fell off a cliff here on the market net flow, Phil.
Yeah. Now they did add back a little bit of liquidity from the overnight repo, but that still wouldn't change our risk off reading. But that does take us back down from that'll take us back down from that euphoric print. But still, you've printed euphoria, so that's typically where we start to see a turn. So breaking through the 1 minute range trader. So definitely like profit taking here. So now we kick up to the 5 minute.
Yeah, we're going straight down on calls
Now, if
on
you
market
recall,
net flow.
yeah. Now, if you recall back here earlier, I said because we're getting the cycle here, that this next move higher will be a divergent high. So this is typical for when you get that. You get that larger pullback. So again, the monthly envelope high in this cluster of support levels that we have here, this area here is going to be important for the bulls to hold. Otherwise, this still can be a bull trap, like I talked about earlier. So when we had that initial push over it, remember I said on the 30-second chart, I said watch this area hold, and sure enough, we had two more impulse moves over that. So now on the 5 minute chart, this is where you need to see this larger pullback hold, and if it does not, you essentially created a trap up here and it rolls back over. So that's still on the table. Bulls have to hold this overnight going into tomorrow. This
Yeah.
4120 area.
Well, we hit a spinning top here, Phil, too. So
Yeah, let's
on
look at what the daily
pattern,
bar looks like.
I'm looking at the daily right now.
Yeah, so that's a swing
Spinning top.
failure where you take out this previous swing high but you close below it. So closing below 4140 today doesn't invoke confidence. Something to keep an eye on that. If you really want a nice bullish close, you close this above 4140. And for the futures, that's at 5 p.m. So we'll have to see how that plays out. Here's the 55 algo, guys. So 50 algo fired down, 55. A lot of times they split. So the 50 was down, 55's trying to go up. Looks like they might get a green bar.
So, Phil, we went from the top of the 1 minute Lin Reg to the bottom in 15 minutes.
Yeah, really, really wide ranges here, guys. Massively. All right, so the 55 was up. You see that a lot. 55 down, 55 up. And let's see what they do into the close.
They're painting a bear flag, Phil. So just remember, guys, the market may close at 1 o'clock. Futures trade till 2. Options trade till 1:15 for SPY. So we've seen days where the selling just continues unabated for an hour after the market closes. So I'm not saying it's going to do it today. I'm just telling you what the market can do if it wants to.
Yeah, this really important for the bulls. If this market's going to continue to grind overnight, that I think they hold this whole area here from 4110 to 4120, basically that whole area. Otherwise, like I said, to me that sets up more of a bull trap up here, and especially if it comes back up to it from underneath and hits it and it resists and it kicks it back down, then I think you can retest. Oh, see, a lot of times what happens, and Bob will attest to this. Bob, can you mute?
Yeah, sorry, I have to put my mute here though. I got gardeners and everybody else out here at my window. If it's not hummingbirds, it's gardeners.
Thank you. Well, a lot of times what you got to watch for is a total, like much like how we saw on a 330 open, you got to watch for that round trip that comes all the way back to the point of blast off. And we've seen that quite a lot in the FOMC announcement pumps, that you get the initial pump and they end up round tripping it. If we do see that and they do come back to 4060 overnight, I think that this is basically just one big bull trap up here and we roll back over. So pretty important levels here, 4110 to 4120. and then 40.60.
Hey, some of the shippers are starting to go red, Phil.
All right, we're heading into the close. So 1 minute's flipped. If we drill down to the smaller time frames because of the volatility, 1 minute's flipped trend. Let's look at the 30-second. Normally we don't look at the 30-second, but when it's really volatile and really moving, you can. Normally for most things, if you're looking at it on a 30-second chart, most stocks, you're not going to see bars like this. It's going to look more, bars are going to look more like that there where there's no bodies, you know. But when it's really moving, you know, this looks like a 1 minute or 5 minute chart on a 30-second chart. So lots of liquidity, lots of movement. But right now the trend is down because our range trader flipped. So we like this indicator because for the newer trader, you know, it takes the guesswork out of the trend. You know, is it trending up or is it trending down? So on the 30-second right here, it told you the trend was reversing. And if you're interested in what we've been showing you guys today, our specials, I'm going to plug it here. You head to tradegenius.co or tradelikeasgenius.com, same site. We're running specials. This gets you into the room with us. And we're in Discord. You can ask questions. You're trading with other traders in there. Pretty good community. Check it out. All right, that's the closing bell. So from here, the futures run another hour.
Sorry.
And what can happen is, hey Bob, Freeport LNG allowed to expand restart activities. Or you natural gas buyers. That'll be bullish for LNG. So the regular market is closed. If you guys aren't familiar with futures and stuff, so the SPY cash session has closed. S&P 500 cash session has closed at 41.19. Getting some stock buy signals confirming here into the close. But what's interesting is the futures continues to trade for another hour, and that's where we look to see if there's like a extended move down. A lot of times if the institutionals are like, you know, get out of Dodge, you'll see quite a large move after hours that you don't see reflected in the index once the cash session closes. So that's what we're keeping an eye on here. And the options market is open for another 15 minutes on the SPY. It's the only market for options outside of say future options. But the stock market, the SPY future or the SPY options, the ETF, they trade until 4:15.
Yeah, we basically come back down to 41.28, 29 area.
Yeah, all of that very overextended up there, and really overextended over this area. This is all for me. This is borrowed time, and really. Anything over 40.65 on the S&P 500, which is over that JP Morgan collar, is thin air. And here's that collar level. And so we're way over it. Don't be surprised to see price get back under that. The only thing I would say that would change my mind is if the collar moves or changes. And, you know, we'll post that in the rooms and stuff like that if it does change. But right now, I haven't seen anything to that effect. And the collar, that's the top of the collar. So the collar, I mean, think of it like a collar, you know, and it's basically meant to corral a price range. And it's so big that it does have an influence on the price of the stock market. So, you know, it's a quarterly thing. So they're not necessarily sweating this move, even though they're probably very red on that position. But they got a lot of time because they take it a quarter at a time, and they'll roll it out to the next quarter. So it you know if it gets back under that collar and then heads back down toward the middle of their collar range, which let's see, I think I have it here on this chart. Yeah, the middle of the collar is 3630. So a lot of time what we've seen is that when you poke above the top of the collar and it comes back down, don't be surprised if we hit 3630 between now and March. Especially if liquidity continues to go down. We'll have a better picture of the liquidity trend tomorrow afternoon after the market closes.
The other thing too, Phil, if these guys are panicking, they're going for cheap eats. They're going after where they really think they can get some really quick couple percentage point moves without taking big positions. So
right.
I think that's why all the garbage is going to the top.
Right. So typically when we see like this on the 5-minute where we have all three of our heat oscillators rolling over, and the gray bars are just telling us that it's rolling over at that point in time. But we had like 2 instances of that. Usually when we get that on a 5-minute like that, you're going to see the move take a break, which is what we're seeing play out here.
Options are closing now, so the market's ripping.
Jeff Dickinson, please talk about what typically happens after a meeting announcement and market flies immediately. What's been happening in that situation in the last couple of FOMC announcements where we don't see the market reflecting the tone of what Powell said, we typically see that roll over the next day or two. All right. And so this is another situation like that where I find myself saying that the market's pumping on extremely hawkish wording here, and I think that the price of the quarter basis point hike was priced in, already. So we're just kind of like finishing off a move that was priced in. So the sell the news part of this hasn't really happened yet, but that's what I would expect to see happen as things progress going into tomorrow. And we also have the jobs number on Friday too. Could we hold into that? It's possible. That's 2 days away. The reaction off of that will be kind of interesting as well. I do think next week, the probabilities of next week being red are pretty good from here. EFE, as far as custom packages, give Matt a Buzz Matt, Trade Genius 101 at Gmail. And ask, if you're looking for something specific, just run it by him. And we'll see what we can do.
Okay, guys, I think we should probably wrap it up, Phil. We bored these guys for 2 hours and
I'm
a
just
half.
trying to see if we got questions that got missed here. There's a ton in chat today. My goodness, you guys are busy.
If we close up tomorrow and Friday, then we have a crack up boom on our hands.
If you guys didn't get a question answered, post it now before we go. I'm looking right now. Silver miner, I don't know. I think we post pretty consistently now, 6 times a week.
Since October.
Like nonstop. I don't think we've missed a day. Um,
Mm.
we take Sundays off, but 6 days a week. JJR, you are correct. It is not federal, and it definitely doesn't have reserves. It makes reserves, but it's not really reserves in the true sense of the word. Creates inflation is what it does. JJ, dumping BTC. BTC usually leads. Right now, BTC isn't doing anything on its own. It's just, there's some kind of collar between BTC and the markets. There's some sort of arbitrage. And so that's why it moves up and down with the market. Sometimes it moves in a greater percentage or it pulls back in a greater percentage. But right now, it's just beholden to the equities. Now, as we progress and get closer to the next halving, there are some supply demand imbalances that happen because the halving event cuts the amount produced in half daily, and that always produces a move up. But don't be surprised if it's a little muted this time around, because the yield curve is telling us that we probably have a longer period of time where this market's going to grind out and be maybe, we'll get into the lows of this bear move, assuming this plays out that way. It could be a longer sideways move than what we're used to in those BTC cycles. Bears hoping for a crash and bulls hoping for a smash.
And we're right at 41.40, Phil, to close the day off. They're not making it easy. But if you're own gold and silver miners, you're pretty happy today. Uranium miners, you're happy today. Steel, you're happy today.
Bob, Lion's Heart on NG. Do you like boil for NG?
Me?
Yeah. What do you like playing for NG? Natural gas.
Oh, I'll do cold and UNG. You're thinking
KOLD and UNG.
Yeah.
There you go, Lion's Heart. Just remember, it's pretty bullish for natural gas as we progress through February. So it's definitely oversold. I was looking for sub 3. I think I had 258, I think, marked on my chart for a potential area to look for bounce. But mission accomplished under 3. So I'm looking forward to get back over.
Which is ironic because we're paying 400% of average out here in California for natural gas, to show you how politicians can screw everything.
Jelly Gelato, do you think most stocks will drop because of this hype? We definitely think it's overbought here. And if you look on the chart here too, right at the moment, this is what we call a head and shoulders. So that's a topping pattern. We look for a reversal here. Pretty clean too. I like the symmetry on that. So then you just look for this neckline basically to break, and then you'll get a measured move from that to that distance. You look for that same amount of distance to break down. So somewhere in here. It's typically how that's textbook head and shoulders reversal move. So we'll see if that happens as we get into the overnight session or not. Keep in mind too, the ECB has a decision. I think they're expecting 50 basis point for the European Central Bank, and I think the what's the other Bank of England, BOE, they got a decision too overnight. Yep. So we got a couple of kind of rate central banking decisions overnight too that might play into the market tomorrow.
Yep, and we have employment report on Friday. So if that comes in hot,
Bob, Tam's asking about gold. Like, what's your thoughts on that?
Um, oh, it performed very well today. I think Powell's losing control of the gold and silver miners. So just have positions. We added some silver positions yesterday in anticipation of Powell message not being um, uh, adhered to, and so um, I like the miners more than gold itself. They have leverage over it. So I have Barrick Gold, I have Wheaton Precious Metals, we have Hecla Silver, we have Silvercrest, we have uh, one more out here. Let's see here. Let me pull it up.
What do you think about Zim here, Bob? At
Zim,
10, at,
well, Zim like rising up here to go into its earnings report. So I know I pushed into my soul today, but that's okay. If we market pulls back tomorrow, Zim will pull back. Also have Silvercrest Mine, Avino Gold and Silver as well. So I hope that and I have GDX and GDXJ. So
Shanna,
I'm pretty
just
heavy.
sorry, Bob.
Go ahead, I'm done.
Shanna, if you there's a chat box on the site, or you can email Matt directly at TradeGenius101 at Gmail, um, and he can kind of discuss with you, you know, based on what you're looking for, what might fit as far as the package goes.
Yeah, there's a lot of choices.
People want all, you know, some people want a lot of education, so we do an educational heavy package, or some people just want the, you know, basic get in the room, chat, you know, because when you're in the room, you're going to interact with us, interact with the other traders. You'll see the Discord signals for the different entries on stocks and crypto and stuff like that.
Well,
So
good.
I think we're starting to peter off here, where now that it's quarter after and the SPY option market's closed, we're not really seeing much of a, you know, if this thing kept falling, trending down, we'd stick around and see where it ended up. But it looks like they're probably going to pin it around this level. Oops. If you notice, I have a line there at 41.40. So we might bob around here. I'm not seeing anything coming out on earnings either on the news. So I don't think we got anything pressing here. Meta. Oh, Meta. Q4 EPS $1.76. Q4 revs 32.17 versus 31.53. They also announced a 40 billion increase to their buyback.
Jeez. I wonder how long before they'll take themselves private.
40 billion stock buyback. Meta shares jumped 13% following earnings and guidance. North Korea says they'll take the toughest reaction to any U.S. military moves.
All right. Well, on that, I'm going to move on out of here, guys. Thanks for listening. I'm going to get on my day and think glittery thoughts and think bad tech.
All right, guys. Yeah,
right,
that'll
so
wrap it up. We're gonna shove off, and again, if you could like and subscribe and hit that notification bell on the channel, it'll really help us out. And we will see you guys. We'll do a video, our next video tomorrow. We'll leave this one up for replay for today's video. And hey, you guys have a good one, and we'll see you on the next FOMC live announcement day. We'll do another live stream. Take care, guys.
All right. I'll see you guys. Bye.